If I go in more detail, by definition, accounting is art of recording and classifying, summarizing financial transactions in the preparation of financial statements. So basically, how you are going to record your transactions, how the transaction entry has to be written. That we also say it's the journal entry. If you talk about in financial terms, so a transaction is nothing but it's a journal entry. Whether it is a sales invoice or it is a supplier's invoice, it has to be a journal entry into the system at the end. So any transaction which occurs in an organization, the end result of the transaction is a journal entry. And that journal entry will be generated whether you use AR module, AP module, PO module, fixed assets module, payroll module, or cash management, or any other module you use. At the end, there will be one journal entry generated which will have the actual effect of the transactions. So it's not that a journal entry is only generated in GL module or journal ledger module, but journal ledger will be the module which will be actually storing or recording all your transactions coming from other modules. So for those who are not familiar with these jargons like what I'm saying, AR, AP, and GL, PO, so these are the different modules which exist in Oracle ERP. For example, PO is purchasing module, purchase orders. GL means journal ledger. AR means accounts receivable. AP means accounts payable. So the other different modules. So there is only one ledger module which is called as general ledger, and rest of the other modules are called as sub-ledgers. So we'll see in more detail them later on, just to make you understand that other modules are called as sub-ledgers. For example, AR, AP, PO, fixed assets, or payroll. These are we consider as sub-ledger, and journal ledger is called as ledger module because this is the module which will contain all the accounting entries from different sub-ledger modules. So each transactions which you are going to record in real world, they will be recorded in a respective sub-ledgers. For example, if your organization is going to purchase set of stationery for their employees, then this transaction has to be taken from a module which is called as purchase order. So you cannot record these transactions in AR module. This has to be recorded in purchase order module. So depending on the nature of a transaction, we use different sub-ledgers. For example, if your organization is making some revenue or income, then those revenue or income which is coming will be coming by selling goods or by selling services to their customers. So if you record these type of transactions, then you have to use AR module because the AR module is the right sub-ledger to deal with these type of transactions. Another example will be like if you are going to pay whatever the stationery you ordered in your organization, and if you are going to pay for those stationery to your suppliers, or your organization has got employees and those employees incur some expenses, day-to-day expenses, and they are claiming the expenses and you have to pay those expenses to them, then those sort of payments to your employees and supplier has to be made from accounts payable module. You cannot do this from AR module. So there is a different sub-ledger which is used because the nature of transaction is payments, and we deal all type of payments through the accounts payable module. So this is just an example to start with, that we have different sub-ledgers which caters with different sort of transactions to meet the organization needs. So that's why we have different sub-ledgers modules which will be given access to the organization employees. So there will be a group of users who deal with purchase department, so they will be having access to purchase order module. There will be group of users who deal with the customers and they record the sales and revenue, so they will be given access to AR module. There will be group of employees in organizations who will be dealing with the suppliers and payments part, so they will be dealing with payables module. So that's why we have the ERP system have got separate modules, and the employees have been given access to these modules separately, and there's a enough security available which can be given to the users. So that's why an ERP system is suitable to meet this type of requirements for a large type of organizations. However, if the organization is small, you can also do, if the volume of transaction is less, then these requirements can also be met using non-ERP finance systems as well. But for bigger organizations, to manage a large volume of data, you have to have an ERP system. So first we are going to understand some of the concepts like the journal entry, how these transactions, purchase order or sales or payments, how you record them in the system. These all are actually the journal entry, and these journal entry are classified in terms of accounting. So if you are making revenue, your organization is making revenue, then these transactions has to be reported to an account type which is called as a revenue account. And if your organization is acquiring some assets or building assets or purchasing assets to their organizations, then these type of transactions are at the journal entry, and they will be reported in an account which is called as asset. Similarly, when you are making, when you are ordering for goods or services from an external vendor, you are actually going to pay them later on. So we have the concept of liability, because when we order the goods, it's not necessary that we pay them immediately. We pay them after a certain period of time. So till the time you pay them, it becomes a liability to your organization till the time you have not yet paid. So those type of transactions are stored in an account type which is called as liability. So, and if your organization is ordering stationery or any other expenses, those type of transactions will be recorded in an account called as expense. So we will be seeing more details. So what I was trying to say that each transaction type, each transactions which occur has to be reported to account, to a certain type of account. And we have to first, in the very beginning, we have to first set up this account, then only we can record these transactions. So what we are going to achieve is what are these different types of accounts which exist in real world, and what types of accounting entries is recorded in these type of accounts. So that's what we are going to understand, and these type of accounts which we are going to understand will be your revenue account, asset account, liability account, owner security account, expense account.